Morning, Chris. How you doing?
Good morning, my friend. I'm very well. How are you?
Good, good, good. This is Brian Jones, and I'm here with Chris Hood. Yeah, world's most interesting man, professional trader, living the
World's
dream out
worst
there,
jiu-jitsu guy.
and back in jiu-jitsu.
We're
So
back in
how,
jiu-jitsu, but the world's worst jiu-jitsu guy. That's
oh, worst jiu-jitsu. I doubt that.
the
Like,
worst jiu-jitsu guy.
so how's the training going?
Oh man, it's so good to be back. It's hard to get the donuts off. Like I've worked out that as I've gotten older, every donut that comes on takes about 7 times longer to come off. So I've got to watch the donut intake over the next couple of months. But just for
Metabolism definitely changes the older
what's
you
that?
get. The metabolism definitely changes the older you get.
My metabolism has taken a holiday. I think it's still under COVID lockdown. It's not doing anything. It just sits on the chair. So it's a challenge trying to get the metabolism to fire up a bit, but it's just super cool to be back with the guys and, training a bit. And now it's a matter of planning for the next tournament and so on. So yeah, it's great. It's awesome.
We were chatting a little bit earlier about how much calmer you are.
I tell you where the calmness comes from. When you've eaten every single donut in Southern Ontario over the last 18 months, you become a lot harder to move, right? So 220, 230 pounds, if some guy's trying to smash you, you could just sort of lie down and take a quick nap. So I was saying to a buddy of mine, when we left the gym before COVID, everyone looked like they could have been modeling, swimsuits. It was one of those things. Now we all come back and it's all a little bit of, we're the before pictures now,
A little soft, a little soft.
yeah, there's a little bit round in the edge there, my friend. Look
But
at
hey,
it.
if you're stuck on the bottom and you try a reversal, you try to roll somebody from cross-side with mount or whatever, and you know or they try to roll you and they don't quite get it because they just lose the momentum. That
Yeah.
donut saved you. That donut saved you from your escape.
Well, when I'm sitting in someone's guard and I sink my weight, I mean, the one guy said to me last night, he said, it's like trying to move a fridge. I'm like, well, okay, I'll take that. I'll take that as a win. But then when you try and move yourself, when you try to scissor your legs and you trying to sit up, you've got to move an extra 45 pounds. It's
Oh
not,
yeah, it's like a
yeah,
weight vest.
not easy. I don't think I've ever been this sort of jiu-jitsu unfit, but I think it will take me about 5, 6 weeks and I should be back.
You'll be fine. So what
But I
about
think as
the
you get older, though, it's harder to improve. Like your incremental improvements in skill and fitness
right?
just take a lot longer than when you were 18, 19. So
The main thing about getting back into it is to not get hurt.
yeah,
That's getting back in. So what do
yeah,
you
we
think?
have a rule of no subs, so we don't do submissions as such. But whenever my coach says no subs, my mind's already going to the meatball marinara special from Subway. I mean, like, come on, can't we get a sandwich? It's a little bit confusing. I think it will take me a couple of weeks to get over the order at
Yeah,
the sandwich shop when he says no subs. You know.
you got to get something. You got to get a pita or something like that.
They're going to have to term it differently, like no shawarma or something. We'll see what happens.
So what about the market? So not a whole lot of movement.
No, look,
And
this week is two things that are affecting us this week. One of them is its earnings. All right, so Google, Amazon report this week. Google today, Amazon on Thursday. We had Tesla yesterday. Market sort of sitting back going, well, let's see what happens, right? That's the one thing. And then tomorrow we've got our friends, the chuckleheads, that are going to be talking at 2 o'clock from the Fed. So with that sort of, not volatility in the terms of, oh, things are going to move, but there's a potential. These are both market driving events. We could go either way. It's going to be interesting to see what happens today. Once you've got the likes of the Googles and the Facebooks and, all the big players that start pushing their earnings out, direction will be determined, right? And it's a question now of whether the expectations meet the reality. I'm a big fan of, trading Google and Amazon, the day before earnings. There's this vol crush trade that we can do going into earnings. The only problem is we've got earnings, it's midweek. Usually if we've got earnings on a Thursday going into a Friday, that's fantastic because you get this vol crush plus theta. Pardon me, it can be really good on the option side, but now you've got to play it a little carefully because you can't look at pinning trades when you've still got 2 or 3 days to go. So your opportunity goes a little less. You just don't have the same sort of transactional variety that you would have had if the earnings were later on in the week. But you've also just got to play it calm because this is the season. We're at that time of the year where people go on holiday. And with the economy opening up and people starting to travel, you can already start to see liquidity starts to drop down. You start to see these widening of spreads. It just becomes one of those markets where I believe, and I was telling my clients yesterday, bring your trades in closer in time. Try and trade intraday. So if you're trading intraday, you have less of this overnight risk that you want to take. You don't want to be taking a lot of overnight risk. We can already see this morning, China selling off, Hong Kong selling off, that doesn't bode well. Like, when you start seeing those Asian markets start to, get sick, it usually is, like coronavirus, it starts there and it comes this way. So you've just got to take into account what we're doing. It's what time of the year, the seasonality of things, and just the general environment. And this is not the time to go all in. Small trades, there was a period about 2 weeks ago, 2-3 weeks, the last 2-3 weeks have been very, very good. And the question now is, how do you maintain that? What you don't want to be doing is having a good week or a good couple of weeks, you string them all together, and then you go, you know what, this is never going to change. And then you load up, and then you lose all the gains that you made. Sometimes it's good to just take stock, sit back, wait 2 weeks, let things play out, and then go back in. So,
I haven't been trading as much on the earnings side. I've got a few trades on earnings, like the run-ups and everything, but mostly I've been sticking to the indexes.
It's hard. Look, index trading during earnings season is almost like the easy win, right? And when you're trading to be profitable, you really want to take the easy road. It's like going to a jiu-jitsu tournament and you're a black belt and you go, you know what, I identify as a 7-year-old white belt, so I should be allowed to go and, take the easy victory, man. I mean, I'm at that age group now where there are not many, 49, 50-year-old men my weight, my belt, right? So when I go to a tournament, it's almost like I get a medal for just navigating traffic. So, I have to either drop down into these, monster divisions and risk injury, or do I just take the points and, get the medal, maybe have a, exhibition kind of match or something? I don't know. You've got to be a bit selective. And trading is the same. There are no prizes for taking excessive risk, and there's no prizes for, trying to be a hero. You're trading to be profitable, not trading to be right. So rather take the easy win. If you could do an easy win on an index, trading healthcare, technology, and maybe even consumer staples just as an ETF, buying at the 34, holding, closing at 2 ATR, it really doesn't get more simple. It's not as sexy as saying to your buddies at the local barbecue, hey, I made I made 300 times my money on, a trade on XYZ startup trading app, whatever it is. It doesn't sound so cool when you say, I made 2 times my money trading the healthcare index. It just doesn't have the same ring to it.
Yeah.
But in trading, you've just got to take the easy win.
Yeah, I want money. I don't really want bragging rights.
Potatoes type of trade.
I don't really want bragging rights.
I think all of us want that. No, well, bragging rights comes with 2 sides to the story, right? You can brag on the win, and then some people, find bragging rights in the losers. Like, oh, look how much money I lost today. Great, go get a gold star and sit in the corner. And this psychology for retail traders is something that they have to get under control very, very quickly when they start trading with real money, because that real money rush, that dopamine addiction that you get from having a winning trade can be pretty dangerous, because not every trade is going to work that way out. And you will get gravitated to, the high return, low probability type of trades. That's one of the reasons why I teach these low probability, high profitability type strategies. Once I've seen my clients demonstrate consistency with the low profitability, high probability type of trades. because you get them into that mindset of easy wins and consistency over, consistently losing and then having a big winner and then giving it all back on the next trade because you thought that your luck has changed. There's a big game to this. And, often you don't see a lot of beginner retail clients or traders taking the time and effort to learn that part of trading. People have a very warped view that trading is all about the trade. It's, here's the graph, here it is. No, I think there's so much more to that's the culmination of something. It's the basis of your mental state. It's the basis of what you see and how you interpret data. That determines the trade. But if you have no depth in terms of understanding, you can't see correlations between data, you don't even know how to manage a trade, and someone gives you the trade and you happen to win, I think that's dangerous in the long run because you haven't got the skill set required to manage it. So eventually you'll just give the money back anyway. That's why with that AMC and GME, and you had all these retail clients making money, we haven't heard any of the stories about how much money was given back. So someone might have made something, but did they keep it? Like, I just want to know, did they keep it? Go find them a year later and see what they're doing. And you'll probably find that, a good portion of the people that made money in that run have given it all back because they had nothing underneath them protecting themselves from making bad mistakes and stuff. They had no process. So tough time to trade.
What types of trades, so obviously we're in earnings right now. What types of trades do you like to do for earnings? What are your favorite sort of plays on earnings?
My favorites for earnings are often the low risk, so low capital, high probability type trades. So I really enjoy trading call butterflies around earnings, particularly where stocks have a tendency to move, with a range, right? So when you look at the sort of average range that a stock can move around earnings, if you look at volume and open interest on particular strikes, you can get pretty close to getting the pin. Now, the problem with butterflies is that most people see it only as a win if you pin it on Friday at the middle. I tend to take a different view. I go, I'm not really going to hold it to Friday for the pin. The pin is hard. Out of the years that I've been doing butterflies, I've only pinned maybe, a handful of trades. It's difficult to pin. It's like, roulette in a way, like how many times have you put your money on zero and it's come up? It's like, it's never happened to me. So it's a difficult trade. However, trading it from the earnings from before earnings towards the earnings, and what they do is they have this volatility expansion. All right. So stocks that tend to rally into earnings, you buy this butterfly and you make it wide. All right. So I tend to go with very wide flies. The further out I am, the wider it is. Okay. It's like shooting a bullet or a rocket from far away. The smaller the target, the harder it is to hit. So the further out I am, the wider the net, the easier it is to catch something. So the strategy that I like to use is I buy this wide fly. And because it's so far out in time, it's actually quite cost effective.
Like when you talk about far out in time, how far?
20 days, 3 weeks, 4 weeks, I can do that. So what I do is I look at the expected move. I'm 4 weeks away from earnings and I buy a really, really wide fly, really wide. Let's say I'm only paying $100 for it. Now the question is the first strike. So remember, a butterfly is a 3-strike trade, right? The first strike that I have is maybe 2 strikes out of the money. So I need the stock to move a little bit, just a little bit to get that in the money. And what I do is I plan adjustments, right? So I look at things like the TTM squeeze. I look at things like the PSAR. I look at things like momentum. I look at volume. I look at all of these things. And if I see these things starting to increase, all right, so I see the TTM starting to form a smile on the bottom. I see momentum is starting to shift to the upside. There's a little bit more positive press about the company and, things are looking a little bullish now, What I'll do is I'll take off the 2 outer wings, the middle and the upper, or just the middle, right? But the stock has to have passed that first strike. So now what I do is I go from having a call butterfly that was cheap to having a long call that's slightly expensive, but it's in the money. So now my delta on that long call on a stock that's already demonstrated that it's moving up, and it's got all of these momentum elements behind it, is now in the money with a delta of, like, 70 to 80. So it's almost like buying the stock. So it's a cheap way of getting me a directional play without necessarily having to fork out the money up front. And I'm only going to make that adjustment once everything confirms the trade is moving up. So we've had pretty good success on that with NVIDIA. We did a couple of those on Google. We did a couple of those on Amazon, Piton, a couple of those. So it's a strategy that works not for everyone, because when you make the adjustment, the cost of the trade is actually going to be quite high. So you're going to be taking our two cheaper legs, or the credit, together with another debit. So the cost of that long call that you're now holding should be within your risk parameters of your plan. Like if you do this with Amazon, some of those call options are going to be $20,000, $30,000. So you can't, not everyone can do these trades, but the technique of looking at the momentum data, the volume data, seeing where things are being set up, that's the key. So that's one trade that I like doing. The other one I like doing is very, very small spread trades at the money. You buy it one strike in the money, you sell it one strike out of the money. Your risk reward is sort of 1-to-1, and you're not looking for full gain, right? You're not looking for max gain on these small spreads. You're looking for a small movement in the price of the stock. These could almost be day trades. Using call spreads as day trades going into earnings is also a good thing.
How far out do you normally sell those?
It depends. So let's say if Google was doing earnings tonight, I would be doing this week's expiry, 2 strikes in the money and 1 strike out of the money. And I'd literally close it today. I'd either do it at 9:30 this morning, see how the clearing range happens. If it's a valid trade, I'll do it this morning and hold it to 3 o'clock this afternoon, something like that. I personally don't like holding things over earnings. The problem with holding a trade over earnings is you might be sitting at 60 or 70% profit, right? Then you go into earnings and the reaction is slightly negative, and your 70% profit suddenly evaporates, and you've only got 4 or 5 days left on the duration of the option. You're not making that money back. So if I am going to hold through earnings, the prerequisite is to make sure that I've got enough time to expiry, so that if there is a sell-off, the stock can recover and I could potentially make money at the end. Mm-hmm. If I'm going to do something very, very short duration, I don't want to hold it over earnings. So those types of trades work. Put spreads, I would usually do them the day before earnings to close on the day after earnings, so you get the vol crush. Selling a put spread into earnings, especially if it's near the money. So near the money, sort of 2 to 3 strikes in the money. So if it's near the money, you've got to be careful, because as volatility starts to increase on the stock, the theta decay is offset by an increase in volatility. So although the stock is moving up, your put spread's not making you any money, because what you've actually lost in time, you've gained in volatility. So you could be right on direction, but wrong on the tool. So with put spreads, you just got to be a little bit more careful. I think a lot of people get suckered into trade strategies based on the theoretical sort of description of the trade, and a put spread is really attractive. If you look at the way that put spreads are often described, it's like, whoa, that's the trade du jour. It's like going to a restaurant and only getting the chef special all the time. That's the thing. But they didn't tell you that soup of the day was also last week's. It's not. It doesn't always behave the same way. And one of the things I try and teach my clients is you've got to know what tool to use at what specific time. You can't just say, well, I've got a hammer and I'm going to go and build that house. And now we're putting in windows, and every time you stick up a pane of glass, I'm just going to throw my hammer through it. You're not going to be on that building site for very long. So you've got to know when to use the hammer. That's the thing. And a put spread is like a hammer. It's not a generic tool. Have you ever seen people who use butter knives as screwdrivers? And I can't find that screwdriver, I'm just going to use the butter knife.
Yeah.
A put spread's not like that. So, a put spread has a particular, there's a particular point in time that you will use it, and the setup needs to be the same. Same thing for an unbalanced butterfly. When I looked at my data over the last 8-9 months, I found that unbalanced butterflies tend to be my most profitable trade. The problem is the setup that I have in my rules to identify these trades is so hard to find that out of 1,500 trades that I've done from October last year to now, I've only done 11. So it tells you exactly, sometimes if you know what you're looking for and you know your success rate on it, you got to stick to your rules. I could have done a lot more of those trades, but then my profitability would have been a lot less. So, those are the trades that I would look at, mainly in a rising market. You want to stick with the call debit side, long call side, call fly side. You could do broken wing butterflies. So if you've got a stock where the possibility of a greater than the expected move is going to happen, so strong squeeze, you've got high positive momentum on the stock, the indicators are all showing a greater than expected move possibility. What you would do with your call flies, instead of making it equidistant, you would just bring the outer wing right next to the strike above the short. So you've got, let's say we're doing a 250. Let me get an example. Let me share my screen and I'll show you with a chain. It's a little easier with a chain. Otherwise, I'm talking in a weird accent and I'm sort of just gesticulating with my hands, and it looks like I'm just tapping out. That's the whole thing. So if we look at Square, let's look at Square. If I was going to do a broken wing butterfly, it would be, let's imagine that the stock is going to have a greater than expected move, right? I would be looking to place my first strike somewhere, let's see, expected move is $24 on 261. So 24 plus 261, 285. So 285 here, this is the expected move of the stock, right? So if I went in there and I went buy butterfly, and 285 is going to be my pin in the middle, what I would do is I would drop this down, let's say 10. So this would be a broken wing butterfly if I expected Square to be greater than 285 towards the end of or towards expiry, right? So if Square was going to move $25, what we could do as well is we could drop this down to maybe 260, put the middle strike at 270, and then make the second strike on the outer wing 272.5. Because remember, the expected move is to 285, right? So if we were playing with my first strategy, which was as soon as Square crosses 260, or which it has, let's change this a little bit. 265, we could go 265, 267, 270, 272.5. So as soon as Square passes 265, or possibly just before 264.80, just underneath, what I would be looking to do is to close the 270. I would get rid of the 270 because the momentum should push this value up as well and this value up as well. So I'll take a short-term loss on that trade, which will be offset by the gains in the 265 and the 272.5, considering the expected move is to 285. So you do the broken wing, and you can do it on both sides. If you expect a greater than expected move to the downside, you would then go to, you would do it on the put side. Another trade worth looking at for earnings, and it's usually done overnight, is the iron fly. All right, so the iron fly is very similar to an iron condor, except the short strikes are exactly the same. So imagine we have Google. Okay, so if we've got Google earnings tonight, okay, so here's Google. Okay, so if we go Google and we were going to do an iron fly on Google, we've got $107, right? So $107 to the downside minus 2680, that gives us 2573, right? So 2573 is over here. So if I go in, let's just start off with the call side. So 107 plus 2680, 2787. So what you would do, if you thought Google is going to stay within the range of the expected move, okay? So it's going to be within the expected move. So we're not expecting a greater than expected move. What we would do is we'd go to 2787. So let's round it up, 2790. We would sell an iron condor. So sell the iron condor. So this is the iron condor. The iron fly would have exactly the same short strike. But in this case, I don't want to do that. I want to stay within the expected move. So I'm going to do the iron condor. So 2790, 2780. And then on the downside, on the put side, we're going 2680 minus 107. That's 2573. We drop this down to 2573. So 2570 and 2560. 2560. This would give us a credit of 637, and we would make that money as long as Google stays within that range. All right. So the market is expecting a move of 107. The market maker is expecting a move of 90. So we're just outside of that range, because if Google goes above that range or below that range, we don't make any money. That would be a very effective trade to put in place for an overnight vol crush on Google, right? So that's the one that would be a very interesting trade to look at.
With the vol crush, just so people understand, so you're selling when the volatility is high for earnings, and then the options that you sold are going to lose value, or the spreads that you sold to lose value as the volatility drops.
Yeah, pretty much the event that has increased the volatility, the implied volatility of the stock, has now passed, and that then goes away from the market. So then for the next 3 months, it sort of builds up again, and then it comes down again. So I'm going to save this because I might actually do that later. If we were going to do an iron fly, it would be sitting here. We would just go sell iron condor, and we would sell the 2690, and we would then put in the expected move to the upside. So 2690, 2680 plus 107, so 2787. We would buy the 2787. So please don't go off and do this trade. It's not a trade I would do on Google. 2680 minus 107, 2573. So we would 2685 and 2573. Sorry, 2685, 2680. There we go. So I'd have to just drop it a little bit. There we go. Sorry, 2685. Yeah. So this would be a slightly different trade. I wouldn't be looking to do this trade at all on Google. I like the idea of the iron condor, much safer trade. Keep it within the expected move.
On the iron fly, you're looking for the price to stay relatively flat.
Relatively flat. You're not expecting a move at all in the trade. So we would probably, 2695 would probably be the number. The sort of stocks that I do this one on, Netflix tends to do that. It's just a little easier, keeping it within that sort of range. I find, out of my practice, I find iron condors actually quite hard. I find them difficult to trade because trying to establish, I think it's a really difficult thing to opine as to whether or not you'll get a greater than expected move or not. It's hard because it's all psychological. So for me, I tend to rather just ignore it. I'd go, you know what, what's the easy trade? Am I going to try and make a bet on the psychology of the market, or should I just wait for the event to pass and then trade it in the drift, right? There's the earnings drift that happens afterwards. I find the earnings drift a little easier to trade. Once the event is gone, it's a little easier to trade. So, trade cautiously. I mean, at the end of the day, stick to the trades that make you money. For me, making money is much easier on the call debit spread side and, put spread side. Those are the ones that make us money. Iron condors, my personal track record with them is a little weak. I would say that they probably like trying to pass the guard on the left-hand side. My knee is bad, and, anyone who wants to beat me in jiu-jitsu, just go to my left. That's the hack, right?
Right.
So the thing is, trade strategies, certain traders will gravitate towards certain strategies that help them make money, right? Everyone has their favorites. I have my favorites. I personally like bull put spreads, bull call spreads, long calls, and call flies. Those are the things that make me money consistently over time. Me throwing in iron condors, my personal track record with them it's sketchy, because
is this an overall, or is this just earnings?
No, overall, because I tell you what happens when you build your plan, you have to know what tools you like. So imagine you're a tennis player and you have the world's best forehand. And every time the ball pitches perfectly for you on the forehand, you hit a winner. Your whole game strategy is going to be, how do I get into a position where every shot that I get is going to be a forehand? And you can remember there were some players in the old days that used to run around their shots just so that they could hit their best shot. It's the same thing in trading. There are multitudes of strategies, multitude. Some of them have really sexy names. I mean, like some of them are just like, double jade lizard reverse. Whatever. I'm like, look.
Yeah, I don't even know, what is a jade lizard?
I have no idea. I read it in a book the other day.
I've heard about it. I
was looking at it and I was going, there is way too much mental capacity to manage that. I'm not in it. Like, I just won't go into it. If it's going to be hard work, no, there's easier ways to trade, right? Yeah. So if your forehand is the world's best forehand, your whole game plan is going to be based around the forehand. It doesn't mean that a volley doesn't exist or a backhand doesn't exist or anything. It just means your game centers around where you win the points. And trading should be done the same way. If you are good and you've been practicing, I mean, I still practice iron condors. I'll do them to try and get better, but it's like practice. Will I be concentrating my income on iron condors? Probably not. Am I good at them? No. And I think traders develop a sense of self-critiquing, when it comes to those trades. It's like, I'm not going to do something that's going to jeopardize my account. So no, I'm just not going to trade it. It's not the strategy that's in my plan. It's not the setup that's in my plan. If a setup is more dominant, it's more probability. It's more probable that I'm going to win using a bull call spread, then I'm going to go with that. It's easier to manage. I understand it better. I trade it better. Done. So in your plan, it looks really sexy when you can go out and say, oh, I've got 97 iron condors and 75 iron jade lizard fly dragon leg, whatever. I just don't buy it that it's going to be profitable over time. I think that keeping things simple, keeping things manageable. And I know some traders who will only do long calls. They don't even take credits. They refuse to do credit trades for whatever reason. And that's their strategy, that's their plan. They're directional swing traders and they stick with long calls. Perfect. Doesn't mean flies don't work or condors don't work. Just don't be seduced by the theoretical, right? There's a lot of theory behind option trades. Just don't be seduced by it. If you've got the ability to filter out garbage, just filter it out for yourself. What works for me might not work for someone else. It just, what I try and teach is less about the trades. Like the thing is, my trades work. I know they do, and we've got a good track record. But what's most important is, I might give you a trade, but at the end of the day, you're the person hitting the keys. The real money is made when you hit the keys, not when I send you the trade. And that's the big problem for a lot of people, is that they try and they inundate themselves with lots of trades, but they don't know how to manage them, or they don't really understand them, and then they lose. But someone else won and they lost, and then they get frustrated. And so it's a very important thing psychologically to know what works for you. And I know what works for me because I track it. And I will always try and take opportunities towards the strategies that work for me consistently, rather than, I'm not going to take $1,000 of risk and throw it onto an iron fly when I can see that my iron flies don't tend to be good. Or, just because the potential for me to make some money on that iron fly was high. Yeah, but if you mismanage it, you had no potential in the first place. It was all theory. So
yeah, it seems like the more moving parts there are to a trade, then the more difficult it is to try to manage it.
Well. Absolutely. I think the most important thing you can remember as a trader is simplicity and consistency trump sophistication. Like, you just keep it simple. Some of the best trades we've had, and you know this, some of the best trades we've had have been accumulation at the 34 moving average of the bigger players. Every time it hits the 34, bang, we're in. We go and buy more call options, and we keep buying at the 34. So players like Amazon, Google, some of these sectoral ETFs, when they hit the 34, it's like a sale. It's a Christmas sale. You go in and you do it. And those have been some of our most profitable trades. What hasn't worked for us is trying to be smart. If you're trying to second guess things, trying to play the counter trade. I don't know if that's a clever thing to be doing in the summer months, but just keep your trade plan simple. If your trade plan is simple, you'll be consistently profitable. If it starts adding, 10-legged spread, whatever, multiple type of leg trades, I just can't do it. I haven't got the mental capacity to, do a 10-leg, whatever trade. I just, okay, if it makes money for some guys, great, but I wouldn't teach it to a beginner. I mean, I don't even teach call flies to beginners who can't even get call spreads right. I cannot see them managing a 3-leg strategy, well, if they can't do a 1-leg or a 2-leg. It's just like, don't add complexity because it sounds cool. Just keep things simple and build your capability as you go along.
Yeah, I think that a lot of people get caught up in it and trying to do the cool thing. It's the same with jiu-jitsu. It's the same with anything.
Yeah.
So you find this really specialized thing that works really well for somebody else, somebody else with a different mindset, different attributes, and then you try to apply it and it doesn't work for you.
I think it's like, jiu-jitsu is very attribute based. It's like there's some people who are just predisposed towards moving in a particular way. And it's the same thing in trading. Some people can manage single leg trades perfectly. And then as soon as you add a secondary leg on it, they screw it up. Some people can manage a 2-leg, then you add a 3rd leg and then they screw it up. So you've just got to find what works for you. I'm a very simple jiu-jitsu player, and I think I'm a pretty simple options trader as well. I just don't like overcomplicating things to the point of mismanaging it, even with the best intention. When I go into a trade, my intention is to make money, but if I start adding layers of complexity, I still have a high probability of messing it up, and mistiming things. And, I'm not going to try and replicate some of the greatest jiu-jitsu fighters on earth because they look cool. I mean, I can't look cool when I do jiu-jitsu. I'm just like a whale that just lies beached, flapping on the sand. And I think that you have to apply the same thing to your trading plan. It's like, just keep it simple and be disciplined in following what you've said you're going to do. If you say, I will not trade under these circumstances, then don't. Many times people lose money because they break their own rules. It's not the market conspiring against you. I think I say this all the time, but when clients say to me, oh, the market went against my trade. No, it didn't. Market did nothing that was unexpected. You mismanaged the trade. Now, what did you do wrong? Oh, I didn't do this. I didn't. Okay, now we got to know to do that next time. But don't ever blame the market. When you lose a jiu-jitsu match, it's not that, the partner, the opponent conspired against you to make you lose. No.
It's always the ref's fault, Chris. It's
Huh?
always the referee's fault when you lose.
Oh, geez. Oh, yeah. Oh, well, don't look at me because I did that after the Worlds in 2018. Why was the ref sitting on the other side? Why was he standing there? He should have seen my wrist lock attempts that I was doing on this side. I've had my fair share of blaming refs.
Yeah. I mean, everybody does, I think. You try to pressure them into changing their decision. I mean, it's like,
why didn't you see my reverse Kimura on his pinky finger? Like, that's one of those advanced skill trades. That's one of those advanced submissions we learn at white belt 3 stripes. No,
exactly.
Just keep things easy. One thing that I get a lot of from clients is there's a willingness and an intention to always run faster than you can walk. So, clients, when they come to me, I always say to them, for 30 days, just don't trade. Okay, even if you've got hundreds of thousands of dollars, just don't trade. Just for 30 days, just paper trade. Let's use that time to define exactly what you are good at first. Let's look at your athletic ability. It's like taking someone who doesn't have any athletic ability, putting them through one beginner's class and then telling them to compete. Like, you wouldn't do that in a normal sport. So why would you do that when your money is involved? You've got to practice. We have to see whether you've got a forehand, a backhand, whether you can pass the guard, whether you play on your back. We've got to see that first. So let's see you in training. Then we go to the competitions and we have a game plan. And the game plan is the strategy. And if your strategy at your first tournament is don't get taken down and pass the guard and beat your whale on top of the guy, well, that's your plan and you're going to go off and do it. But you won't know that unless you've practiced it and know that that's where you've got the higher probability of winning. And I think this is where a lot of people, I don't know, they lose sight of things when it comes to trading. Because when you put a red candle and a green candle and dollar sign in front of things, all that stuff goes to shit. It's like they just forget it. It's like go primal. Boom.
It does bring out some emotions for sure. That
Like
you don't
animals. You know, there's that sort of amygdala response, you know, in your brain. You know, you suddenly get all caveman when there's a dollar involved. And it's like, I find it amazing. People will phone me and say, oh, I just took a loss of 10 grand. And I was like, well, why did you do that? And they go, oh, well, I did this, and this. And I was like, show me your rules. And the rules will say, don't do this, and this. They like literally went against their own rules. So I was going, why didn't you just read your rules and follow them? Oh, I thought this. Well, thinking sometimes can be a problem when it comes to money. You know, you have to be less emotional about things. So people have some hard lessons. They learn some hard lessons in trading, but it's never the market's fault. Like, you know, market doesn't know you exist, doesn't care. So, you know, it can't conspire against you if it doesn't know you're there.
So I have a question. Where you stand on crypto now that it's sort of, there's like a resurgence. Do you have any new thoughts on it?
I just don't. That's not my. This is one of those things, not my wheelhouse. I can't play it. I hold Ethereum. You know, the problem that I had was maybe it's because with Bitcoin, I find it a very selfish asset. So the only people who talk it up are the ones who currently hold it. And it's in their interest that I would buy it because, you know, because I buy it, I push the price up, it makes them money, right? So they're not going to tell me it's a bad asset to begin with. You know, so I don't know. I'm on the fence. You know, there was a rumor yesterday that Amazon was going to accept Bitcoin and then they came out and denied it. I don't know, a resurgence. It's just doing what the charts have said it will do. I can't treat it like a currency because, you know, currencies don't lose. One of the things that currencies have to have is an ability to store value. And this didn't store value when it dropped from 65,000. And don't forget the million people who blew out their accounts because of leverage. So I don't know. I'm on the fence. I personally, I don't like trading it. I don't trade it. I'll trade some of the stocks that are involved in it, but even then, I don't like trading stocks that can move 30% either way in one day. It's a hard trade, man. It gives you gray hairs. You know, would I rather make, you know, 300% on a Google trade, you know, where Google's a bit more consistent, or would you think making 300% on Riot or Mara or Canaan or something like that, you know, what's going to give you gray hairs and what's going to keep you young and healthy and vibrant? You know, I think Google for me has become really a focus area, Google and Amazon, because they are consistent deliverers of profit. You know, in my book, almost 40% of my total year-to-date profits come from 3 shares. And I trade a lot. So it tells you just how many shares are hard to trade. And I know that over time, the more of the garbage trades that I can cut out of my plan, the better my results are going to be. So you've got to, I think, you know, with crypto, you're either a convert or you're not. And I remain to be convinced. Let's put it that way. Now, having said that, I own Ethereum. I buy Ethereum, but Bitcoin, I don't know. I just don't know. I'd be wrong in giving people any form of, you know, opinion that I have. I just don't have one.
Just curious, you know, just your thoughts on it. But
I think a lot of people got burnt, and you know, if you get burnt, are you going to run back? It's like a jilted ex-lover, you know. What was that one thing someone was telling me the other day? It's like, oh, I lost money on a trade, and I was like, so yeah, it's like me and Tesla. Me and Tesla have a very dysfunctional relationship. You know, I've dated Tesla a lot of times. It's always broken up with me. And it always seems to break up with me and go out with a much younger guy with ripped jeans or whatever it is. I don't know what the young people look at today, but they ditch the nerdy guy who does jiu-jitsu and trading for the guy with the torn jeans who rides a skateboard. I can't ride skateboards. So it keeps doing that to me. And I went through my log and I must have done, I don't know, 60 trades on Tesla this year. And I think my gross profit on Tesla is about $128. So all that work for nothing.
So why do you keep doing it?
Because I get stuck in, because Tesla's still that really hot girl, like
yeah.
So at some point you turn around and you go, I have to exorcise myself out of you. This relationship is toxic.
Right.
It's a toxic relationship. Tesla and me have a toxic relationship.
So are you broken up? Are you on again, off again still, or are you breaking? You broken up?
I made my money back. So this was the goal, right? Tesla, I was down big time. And I was like, that's it. I'm done. Never want to trade you again. And because of the way I manage my book, I look at it by ticker and I saw this big loss on Tesla. And I was like, got to get my money back. And I think you were with me when I did that trade. I was doing a couple and I got my money back on Tesla. And now that I've broken even, net profit $128. I can safely exorcise myself out of the relationship with Tesla and wait for them to be desperate enough to date me again. And, once they've made their way through all the skater boys with the torn jeans, they can come back to the nerd. I don't know. I just don't trade it. It's on my no trade list. Not going to trade it.
Okay.
The setups are always, I just find I've become a lot more disciplined around the setup. Right. So if the setup is not there, I'm just going to sit on my hands and I'm going to wait. That's it. And Tesla just doesn't seem to deliver the setup. It might be good for other people, great. But for me, no.
I mean, that's really all you need to know. I mean, if you're making money on one set of trades, on one set of stocks and not on another, then why would you keep
trade? Just, for all those guys listening, trade to where the money is easy. Just go where the easy money is. Don't try and make your life more complex or more. I don't think there's any prizes for making your trading more complicated. Like, really, there isn't. If anything, it's going to cost you money. I think just sit back, isolate your plan. I have about 15 trades or 15 stocks that I watch every day. And if I get a setup there, I will much rather go to those 15 on the setup than any other trade. Even if the setup on those trades is better. All right. It's just that I understand these 15 and I trade those 15 really well. So they're the ones that have made me money. I'll stick with those guys. So I think that there's opportunity that comes in earnings. It's boring. It can be pretty boring, sitting on your hands, waiting for things to happen. But, stick to your plan. There's a year is made up of a long time. And a couple days every 3 months that you have to sit on your hands because of earnings is not a huge price to pay, to have consistency. So when you make your money, just don't give it back. Make sure that your plan allows you to keep it. Don't just double up. A lot of people do that. So
yeah, good thoughts, Chris. I appreciate it. It's just a little before the bell, so we'll let you get going and so you can get your day started.
Awesome, my friend. Nice to see you. Please hold thumbs and pray that I don't get injured.
Yeah, be careful.
This is momentum at pace. This is mass moving at pace can often result in, black holes getting created in space.
Just stay uninjured and I don't want to see you in a cast or something next week.
No, touch wood. It's going to be safe. I train with a really nice bunch of guys, and it's very calm and very peaceful, and all of us are the same age, there or thereabouts. There are a couple of guys that I'm old enough to be their grandfather, and that's a little weird. But it's just so nice to see the sport coming back, and people getting back on the mat, and getting some stress relief. It's weird.
Yeah. Well, good deal. All right, Chris. Till next week.
Have a good one. See you soon.
Take care.
Ciao.